let's talk about the stock market. It's the last day of July. How's the Dow doing? I think it's doing all right. Steve Russolillo, my compatriot at the Market Beat blog. Was this a good July?
Yeah, good July, especially how we ended the week last week.
It's not over yet. We have a few more hours, but you know.
But that big rally at the end of last week really drove things. So yeah, it's looking like it's going to be another positive month. I think it's something like 9 out of the last 10 months have been positive for the Dow. It's been a remarkable streak. But looking at today, you know, things are kind of flat. The Dow's down just a little bit, but all eyes are focused on the Fed meeting and the ECB meeting. So the Fed is starting its 2-day meeting
and the jobs report on Friday. It's amazing. The next 3 days, you have 3 big main event type things.
Right, yeah. And so the Fed is almost being overshadowed at this point because the Fed meeting starts today. That is going to end tomorrow, and you're going to get a policy statement tomorrow. Some people think QE3 may be coming, maybe not. It's still a big question mark at this point. But what the ECB does in their meeting on Thursday may be more important right now for the markets, especially with what ECB President Mario Draghi said last week. His comments, you know, the ECB will do whatever it takes to preserve the euro. It seems like, you know, that has really set the bar pretty high for what's to come at that meeting.
Right. Now, you look at the stock market, you look at the Dow, you look at the S&P, NASDAQ too. They are back where they were in the spring of 2008. Before the panic, before Lehman crashed, they are back to those levels. But the economy's not growing. Corporate profits look terrible. Jobs aren't. What's the disconnect?
It's a weird disconnect right now, absolutely, because it's like, who has it right? Does the market have it right, and will the economy catch up?
Or is it the bond market?
Or does the bond market have it right? Yes.
Where the 10-year's below 1 point, for the yield on the 10-year below 1.5 again. Who's got it right, stocks or bonds?
Who's got it right? And I think that the key is that, and we actually talked about this this morning, is that, you know, if there was a whiff of optimism from Europe last week, right? You got some small little statement from Draghi, as we alluded to. And so that in itself powered a huge rally. And so if you're bearish, if you think that the market has it wrong, you're going to miss out on some of these big moves that come from whatever these central bankers may have to say. And so that's kind of the bullish point of view here, is that you're going to expect the Fed, the ECB, anyone to do something. What that something is, obviously, is a big question mark, and whether they're going to get it done.
It was a lot of talk last week. It was nothing but talk.
But it was a 400-point rally last week. So
the numbers count. You know, it's interesting. You had again today. You had a statement, I think, from Hollande, French President Hollande, and Monti. Again, just sort of reiterating, we will do whatever we need to do. You've heard a lot of that the last 4 or 5 days, right? We will do.
It's time for them to step up now.
Well, it's time for them to start. It's also time for them to go on vacation. Honestly, it seems like they are really just trying to set a tone for their big August vacation, the Eurocrats. So again, you're just getting a lot of talk, but no real action. The market doesn't care, like you said. They'll just play the game. They'll go along with it.
Right.
If I had a guess between stocks or bonds, who's got it right? You know what I would guess.
Oh, you'd guess bonds.
I would say bonds.
You're a stock guy, though.
Yeah. Well, I'm a doubter.
Yeah. You know, still, though, a lot of economic data today, though, in the U.S.
Yes, a lot of economic data.
Touch on it. I think it's interesting that consumer spending came in relatively flat, but income was up about 0.5%. That's a good sign. More money in people's pockets, and people are not necessarily spending that money. The savings rate was up, and it's at a one-year high again. So, or you know, 2012 high. So that's
squirreling their nuts away for the storm, for the winter. It's smart.
It's smart. It's
Consumers
smart.
Are being smart.
Not necessarily good for the economy, but it's smart.
Listen, you got to do what's best for you.
I think it's a smart move.
Steve Russolillo, a guy like Steve can spend. All right, we have to leave it there. Steve, thank you very much.